Welcome to the Accountancy Learning AAT sample paper debriefs. In this video, I'll take you through the Level 3 Tax Processes for Business, Sample Paper 2, Task 3. This is based on Finance Act 25. So first of all, we need to complete some statements. Residual input tax is input tax incurred on purchases and expenses relating to. So for there to be residual input tax, it means that we've got to have both taxable and exempt supplies. If a partially exempt VAT registered business exceeds the de minimis limit, the business can recover. Now, reference material 7 here, and it says at the bottom that when it's above the amount, only part of the input tax can be reclaimed. So you would be selecting a restricted amount of input tax. High Life Trading is a VAT registered business and has incurred the following expenditure, including VAT, at a standard rate. Identify whether High Life Trading can recover the input tax or input tax is blocked for each expenditure incurred. So this is largely all about sort of entertainment. So reference material 11 will tell us about business entertainment and blocked VAT. So hospitality provided to an overseas customer from Italy. So we generally don't claim for anything that is business entertainment except when they are entertaining overseas customers. So we can have the tax on that. Lunch provided to a former employee. So that would be just standard business entertainment. So you wouldn't be able to claim that. An evening meal provided to an employee. Now they work for the business, so we would be able to take that because it's not client entertaining. And attending a sporting event with a client from the UK. So this is UK business entertainment, so we would not be able to claim that. So the accountant of High Life Trading has carried out a review of aged receivables at the end of financial year to the 31st of March 26 and has identified some bad debts. So we haven't got any special VAT schemes, everything is standard rated and payment terms are 2 months after the invoice date. We need to identify whether they are eligible for bad debt relief or not and calculate the amount of bad debt relief available. We're going to the nearest penny and entering 0 if we think the answer is 0. So reference material 13 this time, all about bad debt relief. So we've got some conditions to meet here. So let's have a look. Customer A has total debts of 5,598, all of which are less than 6 months old. A bad debt provision has been made. Now, it needs to be more than 6 months old and it has to have been written off in the VAT account. So that would make this one not eligible for the relief. So therefore, it would be 0. Now, customer B disputed an invoice for 498, including VAT, that was invoiced in June 2025, and we're told it has been written off. So this time, it is more than 6 months old because we're in March 2026 and this is from June 25. And it has been written off in the VAT account as well. So that's eligible for the relief. And then we need to do the amount of bad debt relief available. So we need to work out what the VAT amount would be. So whichever your preferred method is, 498 divided by 120 or divided by 1.2, and then that's your net amount on which you can work out the VAT. And that comes to £83. High Life Trading received an invoice from a supplier totaling £1,200, including VAT at a standard rate. The supplier offered High Life Trading a 3% prompt payment discount if payment was received within 7 days, and they took advantage of that. So we now need to calculate the amount that High Life Trading can recover as input tax. So we're not looking to give the figure of how much they've actually paid, but instead how much they can recover as tax. So the original amount was $1,200, which is VAT inclusive. Because we're taking the 3% prompt payment discount, we're only going to pay 97% of that invoice. So the amount that we actually pay over is $1,164. We can then work out the VAT, again, whichever your preferred method is. The VAT on that, which is our input tax that we can recover, is 194, and we need to show to the nearest penny. Bertie is a VAT registered sole trader who's not registered for any special schemes. He has recently purchased a laptop for $1,800 plus VAT at the standard rate. He's estimated that the laptop will be used 50% for business. So reference material 11 will give us some information that we can use for this. And it says that the input tax on assets can only be recovered based on the proportion which is related to business use. So we've only got 50%. So 1,800 is the net amount this time. So read the question carefully. It is the net amount. So to work out the total VAT is times it by 20%, but we're only taking 50% of that. We can only recover 50% of that. So we will divide it by 2 to get 180. And that brings us to the end now of task 3.